Ever wondered how volatile options trading can turn into a gamble? You see, the world of finance is a vast, intriguing landscape where fortunes can be made or squashed in the blink of an eye. And at the heart of this high-stakes world lies the volatile beast known as options trading. Options, in essence, are contracts that give a person the right, but not the obligation, to buy or sell an asset at a specific price within a set time frame. For those who know how to navigate this intricate labyrinth, options trading can be a ticket to substantial wealth. However, it can also be a double-edged sword, leading to substantial losses just as easily. Let's imagine you're at a casino, and instead of rolling dice or spinning a wheel, you're predicting the price movement of a stock. You place your bet, and if your prediction is correct, you win. If not, well, you lose. That's options trading in a nutshell. It's a high-stakes game, one that demands a keen understanding of market trends, a bit of luck, and most importantly, a strong stomach to weather the storm of volatility. Now, speaking of storms, there's a whirlwind of activity stirring up on the internet, a Reddit community known as r/WallStreetBets. This isn't your typical investing group. No, r/WallStreetBets is a hub for traders who are not afraid to take aggressive trading strategies and high-risk bets. It's a place where traders, armed with memes and a cavalier disregard for the traditional rules of investing, wage war on Wall Street, betting on stocks that most would consider, well, risky. So you might be thinking, surely, this must be some fringe group of reckless gamblers. But you would be wrong. With millions of members, r/WallStreetBets has proven time and again that they are a force to be reckoned with. But how insane can this gamble get? Let's dive into the world of r/WallStreetBets. Welcome to r/WallStreetBets, where traders often blur the line between investing and gambling. Here in this digital Casablanca, traders don't just dip their toes in the pool of risk, they perform cannonballs into the deep end. They take on high-risk bets with colossal potential payoffs, often with a do-or-die attitude. Some might call it reckless, others might call it the new era of investing. Let's consider a few trade examples, shall we? Take Trader A. A typical day sees them buying deep out-of-the-money options, banking on a significant swing in the stock's price. It's a high-risk, high-reward strategy, akin to betting on a long shot in a horse race. If the bet pays off, it's a windfall. If not, it's a total loss. Then there's Trader B. They prefer to play with fire by shorting stocks, essentially betting that the price will drop. A successful short can be a lucrative endeavor, but the losses can be infinite if the stock price shoots up. Remember the GameStop saga? That's what happens when a short goes wrong, and it's not for the faint-hearted. Amidst these high stakes, we see gamblers turned philosophers, sporting a unique thought process behind their trades. They analyze trends, calculate risks, and make their move. It's a game of chess, with the market as the board and the stocks as the pieces. Every move has potential outcomes, both good and bad. But what makes r/WallStreetBets truly fascinating is the sense of camaraderie and collective euphoria. A win for one is a win for all. A loss, well, that's just another battle scar, a badge of honor in the war against Wall Street. The community rallies behind its members, sharing in the thrill of victory and the agony of defeat. These trades might seem like an insane gamble, but is there a method to this madness? Let's find out. There's a saying that in every madness, there's a method. Is this true for r/WallStreetBets? Let's delve a bit deeper into the strategies employed by these traders. Now, one might think it's all just random button smashing, but there's actually a method to the mayhem. Take, for instance, the case of GameStop. A flurry of activity, a whirlwind of trades, and a stock price that soared to the moon. But behind this seeming chaos lay a calculated strategy. Traders discovered that GameStop was being heavily shorted by hedge funds. They realized that if they started buying up the stock, they could trigger a short squeeze, forcing these hedge funds to buy back the shares at a higher price. This would, in turn, drive the price up even further. And that's precisely what happened. Or consider the trade of the century, the infamous Tesla call options. Some traders on r/WallStreetBets noticed that Tesla's stock price was undervalued. They purchased call options, betting that the price would rise, and rise it did, leading to astronomical returns. But remember, this wasn't just a blind bet. These traders studied the company, its products, its leadership, and made an educated prediction. Then there's the case of AMC. Traders identified the potential for a recovery post-pandemic and took a gamble. They bought shares, and as the world started to reopen, the stock price climbed. Now, these strategies aren't for the faint-hearted. They carry high risks, and there's always the potential for a severe financial hit. But they can also lead to significant rewards. It's a high-stakes game of poker, where a well-played hand can result in a jackpot. But let's not forget, for every successful trade, there are countless others that don't pan out. It's a roller coaster ride with thrilling highs and gut-wrenching lows. And the traders on r/WallStreetBets strap in, ready for the ride. So it seems there is some method to this madness, but what are the consequences? High risk, high reward. But what happens when the gamble doesn't pay off? Let's delve into the darker side of high-risk trading, where the glimmer of potential wealth can quickly turn into a financial nightmare. Picture this. You're scrolling through r/WallStreetBets, and you come across a post. An audacious trader, let's call him Trader Joe, has just bet his entire savings on a single stock option. He's all in, dreaming of the lavish lifestyle that awaits him if his bet comes true. But then, the unexpected happens. The stock doesn't soar, it plummets. And just like that, Trader Joe's dreams evaporate into thin air, along with his entire savings. This is the harsh reality of high-risk trading, where the stakes are high and the losses can be devastating. Now, consider Trader Jane. She too frequents r/WallStreetBets and partakes in high-risk trading. But unlike Joe, Jane has a strategy. She understands that not every gamble will pay off, and she's prepared for that. Jane doesn't bet her entire savings on a single stock option. Instead, she diversifies her portfolio and only risks a fraction of her wealth on any single trade. Jane's approach reflects an essential principle of trading: risk management. It means understanding the risks you're taking and ensuring you can bear the potential losses. It's about not putting all your eggs in one basket, but spreading them out, reducing the impact of any single loss. But remember, even with an effective risk management strategy, losses are still a part of the game. Even Jane, our strategic trader, isn't immune to bad bets. But by understanding and managing her risks, Jane can weather the storm and live to trade another day. So what can we learn from Trader Joe and Trader Jane? High-risk trading is not for the faint of heart. It's a high-stakes game where the potential for massive rewards is matched by the risk of significant losses. Trading, especially in volatile options, can be a gamble. But as we've seen, it's not just about luck. It's about understanding the risks and rewards and having a strategy in place. Remember, in the world of trading, there's no such thing as a sure bet.